Well, good morning, everyone, and welcome to our annual conference, which this year, as you already know, has taken the theme of building a better future. Over the last few days, I've been trying to finalise what I was going to say today. And as I was thinking, my mind started to wander back over various things that have happened in the 2 and a bit years since I started working full-time again here at Tenet. This is, in fact, my 3rd conference. And over the period of my involvement with the group, there have been quite a few changes. Firstly, I now have 2 grandsons, which is of course wonderful. And here they are, the eldest just over 2 years, and the youngest in this photograph just a few days old, and now just over 2 months. So that's been a very positive development. On the negative, I've discovered that I no longer have time to exercise as I would like, with the result that I put on weight and gone up 1 collar size, a fact that my wife is quick to point out. But even more disastrous, I don't have time to play golf as much as I used to, and so my handicap has gone up 1 shot. Now you might be asking yourself, what relevance is any of this? And the answer is none, except to illustrate that there's been change. Over the same period, there has of course been lots of change both in the industry at large and specifically at Tenet. This time last year, we were all a little nervous. Advisor numbers over the previous 2 years had reduced by approximately 15,000. We'd just come through RDR, and we were about to meet our new regulator, the FCA, who were promising that they would be a very different animal to the FSA, whatever that meant. At the same time that these seismic changes were impacting the industry as a whole, we were planning how we would respond here at Tenet. Now, change is not always popular, but it's certainly necessary in order that we can achieve what we've set out to do, whilst at the same time responding to the evolving regulatory environment in which we operate. Change has taken place throughout the organisation, and your current executive board, for example, is still a month or 2 shy of having been in place for a full 12 months. And in case you haven't met us all, now this is a mock-up that our marketing team found very amusing, although I'm not sure what the relevance of village people is. But in more normal dress, our most recent recruit is of course Jill Davidson, pictured on the bottom left, who's joined us as our Group Regulatory Director. In addition to the executive team, we are, of course, supported by the non-executive directors representing our 4 major shareholders, namely Standard Life, Aegon, Aviva and Friends Life, and by 2 independent non-executive directors, one of whom, Philip Hilling, has taken over the role of Group Chairman. Philip was formerly a senior partner of Ernst Young, responsible for establishing their financial services division. Our second independent non-executive director is Barry Meeks, who has extensive experience of the mortgage sector, having previously worked with Pink Home Loans and HML. Both Philip and Barry are here today, so if you see them walking around in the breakout sessions, please take the opportunity to introduce yourselves. Since coming together, the new executive team has critically reviewed the way in which the group operates, and as a consequence, we've reorganised a number of functions to ensure that in the future we can efficiently and effectively deliver the services that you enjoy. We are aware that in making these changes, you may have experienced some disruption, but you can rest assured that we're working hard to ensure that any disruption is kept to a minimum, whilst our new structures are embedded within the business. In addition to the reorganisation to which I've referred, the board has also re-examined our various areas of operation and our plans for the current continued development, with the result that we've been able to capture our vision for the group in a few key words and develop a strategy to ensure that our vision becomes a reality. The strategic themes against which we will measure our performance are described in the 5 columns on screen. And behind each theme, we have a number of goals which individual directors are responsible for delivering. These goals, in turn, cover everything from the improvement and recording of advice to the end customer, our pricing structures, technology strategies, and our ambitions for our different brands. So we've set ourselves a mission. We want to be a recognised market and industry leader. We want to deliver quality, customer-focused advice, to retain a whole-of-market proposition, to deliver a restricted advice proposition, create a direct proposition, achieve operational excellence, and generate predictable income levels whilst remaining well capitalised. Now, you'll no doubt be aware from press coverage that we've made good progress against a number of these objectives. However, we still have a long way to go. And to help us achieve our goals, we've identified the building blocks on which we will rely and which we believe will support and deliver success. So we wish to be customer-centric, open and honest in our dealings with others. We want to encourage fresh thinking. And finally, we all want to share in the success. So where are we now? Well, as I said at the beginning of this presentation, we were anticipating that 2013 would be a very difficult year. But we, and therefore you, have returned a strong performance. All our subsidiaries have shown positive growth. In contrast to press reports, we ended the financial year with 5% more network members than at the start, although we do expect some movement during the current year as advisors decide which model in the new world best suits their operating style. We've also worked hard building our relationships with the new regulator and have a better rapport with them than has been the case in recent times, which is of course very positive. In the end, group turnover was roughly 20 million ahead of last year, resulting in our generating earnings of £1 million. And unlike our competitors, who in the main report on a calendar basis, because we report to the end of September, our results include all the disruption following the RDR. I believe that when our competitors are reporting their results for the calendar year ending December 2013, ours will stand very positive comparison. In short, we're ahead of the curve. During the year, we've recorded some notable achievements. It's not surprising that the introduction of RDR reignited the debate around whether advisors should be directly authorised or part of a network. This is a perennial debate which the trade press enjoy encouraging each summer, which otherwise would be a slow news period. This year, the debate was given extra impetus by the news that some providers were looking to dispose of their investment in distribution. As many of you will know, I invited a representative of our shareholders to join me in a video presentation in order to confirm their long-term commitment to supporting our group. It is, however, a debate which we, and particularly I, find tedious, because we do, of course, support advisors in either space. For us, it's not a question of which is better, but which is the most suitable for your individual organisations, and we will continue to support both styles. The second debate, which has attracted much press comment, is the question of whether you should become restricted advisors or remain independent. Many advocates of the restricted route have asserted that there would be a cost dividend, and this is by no means certain, and attempts to force advisors down a particular route have met with resistance. What is clear is that forcing advisors into the restricted space is beneficial to the kernel operation. At Tenet, we will continue to support independent advisors, but advisors that wish to remain in that sector must be able to demonstrate that they can meet the criteria. Of course, we can and do also support restricted advisors or indeed hybrid models. Again, there's no correct answer, but rather you must organise your businesses appropriately and in line with the service that you're going to offer. Another notable achievement was our ability to step in and safeguard the future of both MHFS and Honister advisors. Advisors from both organisations faced the threat of being unable to trade as a consequence of their parent organisations being undercapitalised, an issue which does not concern the Tenet management team, as we're the custodians of probably the strongest balance sheet in our sector. The MHFS advisors that have chosen to remain within the group form the nucleus of our new Aspire offering. Recognising the major opportunity presented by auto-enrolment, we have, through the Tenet Employee Benefit Services, developed a comprehensive solution for advisors, which we have promoted at meetings throughout the country. We've invested a considerable amount of time, energy and money in the services provided by TEBS and the support that the team are able to provide. So if you have concerns about how you can support your clients as they tackle this issue, then I suggest that you take the opportunity to visit their stand at the trade fair. We've continued to build our advisor development programme and CPD support, and I'm pleased to report that attendance at our various events has increased by some 60% over the last year. We also continue to try and improve our service standards, and at the beginning of the year commissioned IIC to survey our members to establish what you think of the services we provide. And we were very pleased to be granted a Superior Customer Services Award. The survey carried out was, however, viewed as a benchmark against which we hope to record a significant improvement. And the second survey has recently been completed, but unfortunately we're not yet in receipt of the results. Throughout the year, we've supported a number of initiatives, usually fronted by APFA, which have focused on creating a better future for financial advisors. Whilst much of this work has concentrated on the various consultation initiatives by regulators in the UK and Brussels, we've also brought focus to the level of fees and levies which a reducing advisor population are expected to pick up. And you will no doubt be aware and have seen in the press that the FCA and FOS both recognise that valid points are being raised, and it's hoped that real progress can be made addressing these concerns over the coming months. In other areas, we've not been quite as successful, and the lack of a long stop on our liability exposures and the different interpretations given to the 15-year rule between FOS and FSCS needs to be addressed. In an attempt to bring focus to the issue, we began a petition which to date has attracted over 4,500 signatures. However, it still remains to be seen whether we can start a debate concerning the inequality between our own sector and the treatment of other professionals. The theme of our conference is building a better future, and whilst I believe that we've put in place solid foundations, there's still much for us to do. I hope that individually you've already enjoyed an excellent start to the new year. With the economy, and in particular the housing market, having turned a corner, and that we're all feeling more buoyant, which will encourage both confidence and your clients to take advantage of the solutions that you can provide to address their needs and their concerns around planning for their future. Certainly, the group has continued to perform better than planned, but what more can be done? Firstly, we need to continue to invest in all our brands and in the services that we provide. I've already mentioned briefly Aspire and TEBS, but we're also ambitious for the futures of Tenet Connect and Tenet Select. We would, in addition, like to see Tenet Lime continue to grow market share, and it's already some 35% ahead of the same point last year. Investors in Symphonia continue to enjoy good returns, and funds under management now well exceed £100 million. In all these areas, scale is important, so we will continue to try and grow the brands organically. but we will also consider the possibility of growth through acquisition. During the last few months, we've completed a review of all our internal IT systems and presented to the board a strategy which will require significant investment and probably up to 2 years to implement. The strategy was approved by the board, and the implementation of the improvements has already begun. The investment in our internal systems will complement our continued investment in Tenet Advantage. It's been a long journey from initial concept to delivery, but we're very confident that the continued improvement and development of Tenet Advantage systems will deliver market-leading IT solutions for the benefit of our advisors. As ever, we need to concentrate on meeting the regulator's expectations. Following the changeover from the FSA to the FCA, we have been informed that we've been categorised as a C2 P3 firm. And there are just over 100 C2 organisations in the UK. The grading means that we can expect visits from the regulators on a 2-year cycle with 2 deep dive investigations. P3, on the other hand, our prudential grade, signifies that we're an insignificant risk in the event of failure. The work of the regulator under the new regime will be based around 3 pillars. First, proactive supervision, where they will be interested in assessing conduct risk and positive client outturns. Secondly, there will be events-driven activity, for example, where they identify emerging risks, which they aim to deal with in a timely fashion. And finally, there will be issues and product work which will give rise to thematic projects where firms, market sectors, or products within a sector may cause negative outcomes for consumers. Now, I believe that for the most part, Tenet advisors do an excellent job on behalf of their clients. But the concern is that the process followed cannot always be clearly evidenced from the quality of the file, and thus the FCA's concern about conduct risk cannot be addressed. It is to negate this issue that we've recently been putting so much effort and time into trying to address file quality. It's an enormous issue for the group and one which attracts significant cost. However, it's clearly in everyone's interests that we get it right first time every time, and therefore we will continue to focus on these issues. In assessing positive client outturns, the regulator will also place considerable store on treating customers fairly. So in addition to the measures that have been put in place to improve file quality, we've also begun regular customer surveys, as many of you will know. In the last few months, we have contacted, through these surveys, about 300 clients and have received a 43% response rate. And I'm delighted to be able to report that those responses have been overwhelmingly positive and most particularly highlight that our end clients both understand the service that they are to receive and, importantly, the fees that would be charged. It's generally believed that this year we will not experience the same level of regulatory change through rulemaking that had been, but that there will be increased focus on ensuring that firms comply with the rules that are already in place. And therefore the work that we've done and are doing should stand us all in good stead when the regulator visits. There are, of course, still regulatory threats. For many years, advisors have been building businesses based on taking a small upfront fee and trail commission. The theory was that advisors were embedding value into their business, and the existence of trail commission has proved attractive to industry consolidators, which proves the point. And now this income stream is under threat, particularly in the area of GPPs. In some cases where the income has been stopped, it's not been applied to the advantage of the clients, but to the benefit of the product provider, and that can't be right. The threat to trail commission in other areas has, I believe, the potential to destabilise the industry, and simply suggesting that advisors should go out and transfer their clients onto advisor charging structures for anything other than large ticket cases is not the answer, because much of the income is made up of small items which collectively add up to a significant sum. Now, to be clear, there's nothing in the rules at present preventing the payment of trail commission on pre-RDR business, and I believe that's the way it should remain. Every year that I've stood here, I've said that working for Tenet should be fun, and that despite all the change and challenges that we go through, we should work hard to ensure that we do not lose the family atmosphere that's very much part of the Team Tenet ethos. And I do not limit Team Tenet to those that are employed from Horsforth, but also include you, our advisors. It's our collective responsibility to ensure that our end clients benefit from positive client outturns. Usually during the course of the year, I can find a photograph which captures the spirit, and I'm pleased to say that I haven't been let down this year. These two ladies are the first point of contact that most people have with our organisation. They man our front desk in reception, and thankfully they don't normally dress in their children in need fundraising outfits. But in their day-to-day work, they typify exactly what I mean by Team Tenet. Team Tenet has had to adjust to an enormous amount of change over recent years, and keeping that team ethos and spirit is quite a challenge. There will be occasions when we do not all see eye to eye, and sometimes I know that advisors believe that we're being draconian in the standards that we set. But our aim is to protect you, and ultimately ourselves, in the rare event of dispute with our end clients. Ladies and gentlemen, I believe that the future looks very bright indeed for professional financial advisors, be they independent or restricted, and that the Tenet Group are in an excellent position to take full advantage of the opportunities as they present over the coming months and years. I also believe that the vision I set out in one of my earlier slides can be achieved if we all work together, and that together we can build a better future. Thank you very much.